Economist here. So, in today's video, we're going to continue to talk about the inflationary nightmare that a lot of people are experiencing. A lot of it are you. Let's try talking again. Uneducated economists. All right. Thank you for being here. Let's talk about inflation and what it really means for the economy, because what's taking place right now is really an elevated inflation and inflation expectation, and you can really see it running rampant through just about every single news article out there. It's just talking about not if, but definitely when and by how much it's going to take place. And so I just wanted to share with you some of the research that I have done over the last few years that has really proven the fact that the Federal Reserve was not only wanting, hoping, wishing, and praying for, but actually got the inflation that they were looking for. And this seems very counterintuitive to what it is that a lot of people are going to think out there about what it is that the Federal Reserve is attempting to do with their inflationary scenario, or at least the inflationary target. And so when we think about this, we have to really think about it in kind of two different fashions. The Federal Reserve has the long-term target of 2%, but then there's an inflation that they want right now that is current that isn't necessarily a 2% target. And that is not easy for a lot of people to understand, because being in an elevated inflationary environment only leads them to think the Fed wants to be at 2%. So as we start to communicate about what it is that's happening with inflation, it gets very complicated very fast. And I was just even thinking about it. I was talking with a very well-known prominent business owner, and just briefly talking about some of the things that I know about inflation and some of the things that I've learned through the Federal Reserve's own documents and some of the things that they have recently have said about the neutral interest rate and that moving ever closer to the Fed funds rate and the economy becoming less restricted. And as I started to talk about this, he was just like, the Fed's like, that's too deep. You're looking too deep into it. They're reading tea leaves, they're whatever. And he just pretty much dismissed me. And I thought, whoa, bro, you know what I do? Like, I mean, this is my hobby, yeah, but I take it pretty seriously. I've flown all over the country to go on speaking engagements, and you dismiss what I just said so blatantly. You're like a business owner. You have employees. You're like, people rely on you, and you just dismiss me just like that. And I thought to myself, of course, because that's the inflationary scenario that has been built into the mainstream media narrative, is to literally dismiss the Federal Reserve as like stupid or don't know what they're doing, or too complicated to even really understand it. They're looking at tea leaves, that's how they're doing their judgments. And I think to myself, man, this is how they're able to get away with it. So whatever is stated out there on the mainstream media, that's the information. That's it. That's the only thing that will ever be delivered to anybody out there. So if 99.9% of the people get a message that says the Fed doesn't know what they're doing, that's it. That's the facts of the matter. That's the truth. It doesn't really matter what's going on out there. That's what people believe, and that's what the case is going to be. And so when I think about how it is that they can just push whatever narrative they want and so easily do it, and then when the truth comes out, it's just easily dismissed. Ah, they read tea leaves. They're not doing what do you think they're doing. They're not looking at all the, they're not, yeah, no. And I'm thinking to myself, this is probably the majority of how it is that people think and feel about not only the economy, but the Federal Reserve's monetary policy. So I want to briefly talk about how it is that the Federal Reserve would conduct their interest rate setting policy. Because when the Federal Reserve would want to stimulate the economy, it was pretty easy to do. They have something called the Fed funds rate, which is the overnight lending rate between the big banks. And so now this particular rate becomes very difficult for a lot of people to try and wrap their head around. It's like, what does this mean? What is this interest rate? How is it that they manipulate it, change it? What does it really mean for the broader economy? And really, it's pretty easy to understand it. It's literally the overnight lending rate between the big banks. That's it. And so it's easier to understand it the way they used to do it, comparatively to the way they do it now. But the way they used to do it is that they operated in a limited reserve system. And so at the end of the day, some of the big banks would need reserves. Some of them would have excess reserves. The ones who had excess reserves would lend them to the ones who were in need of reserves. And that overnight lending rate was essentially the effective fund rate. If the Federal Reserve wanted to raise or lower that effective fund rate, they would buy and sell treasuries off these big banks, adjusting the reserves within them, and then that overnight lending rate would then follow whether or not there was an abundant or a limited amount of reserves. I know that gets very complicated to understand, but once you kind of understand that it's just there in the overnight lending rate, right? That overnight big bank lending rate. It's now an abundant reserve system, so it's moved over to the repo facility and the interest on excess reserves, but it's an overnight lending rate and essentially bleeds into a shorter term rates that are, stretched out to days, weeks, months, and then into like a year or so. But knowing that it's not necessarily credit cards, it's not mortgages, it's not, treasuries, it's not necessarily treasuries. They can manipulate that when they got quantitative easing things going on. But it's just that overnight lending rate and then a communication about it. And this is really where it comes into action, because that communication about the Fed funds rate is by far the most important part. See, back in the day, when the Fed would adjust interest rates, that would actually have a profound impact on the economy. That lowering of interest rates then had people out there buying houses, cars, going on vacation. But really what it did is it got corporations borrowing that money, investing into those corporations and hiring people. That hiring people then got more consumption happening. And so when you have that added consumption, that's the aggregate demand that the Federal Reserve would be looking for. So if they were running into a recessionary pressure or a recessionary downturn or aggregate demand was falling, they would lower the Fed funds rate. That overnight lending rate would essentially start moving into the broader economy. You would find corporations borrowing money, hiring people. Hiring people would then start getting the consumer out there, increasing the aggregate demand, and that would be what would essentially save the recession, right? Well, the problem we faced is that the Federal Reserve ran into the lower bound of zero. That was it. They had no more downward adjustment. So dropping interest rates during the recession wasn't an effective tool. They hit the lower bound of zero, and that was it. No more downward adjustment. And now typically you think, well, zero interest rates, well, that's easy enough. I mean, nobody has to pay anything for money. That should be just stimulating enough. But it's really not, because of something called the neutral interest rate. Now, that gets kind of esoteric and it's going to get really deep if we keep going with that, and we will at some point. But we got to think the neutral interest rate is the rate that is neither accommodating nor restricting the economy. And this neutral interest rate is very close to zero. So we back it up a little bit and we think about it again. The Federal Reserve, during a recessionary pressure, downturn in the economy, a fall in aggregate demand, that consumer is nowhere to be found. This is when the Federal Reserve would step into action. This is because this is the recession, right? Job losses are rising. So the Federal Reserve would try to lower interest rates. That lowering of interest rates would essentially get corporations to borrow money, hire people. Hire people will go out there and earn the money and start spending. So goes the recession. It goes away, right? And then you have the Federal Reserve now in a position in which that they are worried about inflation picking up because of all the spending that's happening from all the mass amounts of new jobs that are happening. So really simple to understand in that sense. It takes time. People think, how quickly does this work? It's like literally over a very long time, right? I mean, what is recessions every 7 to 12 years, right? That's how they would typically operate. But when the Federal Reserve hit that lower bound of zero, this is a very big problem for the Federal Reserve, because at this point, dropping interest rates any further was no longer going to work because they couldn't go negative. In fact, even going negative, it was assumed that they would have to go somewhere around 5, 6, 7% negative during the Great Financial Crisis in order to create the stimulating effect of the interest rate drop to get far enough below neutral. So this is very concerning for the Federal Reserve that they've hit neutral or hit zero and not be far enough below neutral to actually stimulate the economy. This is during the great financial crisis. So understanding this is probably the crucialist, is that a word? Crucialist? Anyway, this is the most crucial this is the most crucial point inside of the Fed's like monetary policy and the issues that they are now facing today is that they are at great financial crisis, right? They have hit the lower bound of zero, and now they cannot create the inflationary scenario. It is nowhere to be found. And this is like almost non existent in any communication that you find out there within the mainstream media or any other economist or whatever. You're not going to find people talking about how it is that the great financial crisis failed to produce an inflationary scenario. But now this is where the story gets really exciting because during the great financial crisis in the ultimate low interest rate environment, zero interest rate policy, forward guidance of future policy being at zero for the foreseeable future, all that quantitative easing and the promises of all this money printing creating inflation really didn't create the inflation that they were looking for. And now the Federal Reserve is like, okay, what are we going to do? Right? We have unemployment historically low. Like Obama all the way through first Trump administration. Even Donald Trump was screaming, there's no inflation. The Fed should be printing money, right? And that was with an ultra low unemployment, historic, like best jobs numbers in history. And so now when we think about that situation, this is so concerning for the Federal Reserve. They came up with something called the makeup strategy. This is really where it gets crazy. Because here it is, you got historically low unemployment. All these people are working. All this consuming is happening out there, and it doesn't increase the aggregate demand enough to spark the inflationary scenario. Inflation's running still very low. And so now the Fed has a whole idea, opportunistic reflation, right? The makeup strategy. They're going to try and create an inflationary scenario to make up for the fact that they failed to achieve the 2% target over the previous 10 years. Now, this part is probably the most lost out of all the communications that you'll ever find out there when it comes to economics. Nobody, literally nobody, will tell you that back in 2019, the Fed was wishing, hoping, begging, praying, and absolutely going to get an inflationary scenario come hell or high water. I don't know how many people know that. I knew it because I was constantly reading through their documents and trying to share those documents, and I didn't know exactly what it was going to look like in order to create an inflationary scenario, considering that they had just quantitative easing of 1, 2, 3, and 4, which took the Fed's balance sheet of $850 billion to over $4.5 trillion, and it failed. This failed them. It failed to produce an inflationary scenario. So now here it is. The Federal Reserve is stuck at the lower bound of zero. Right? They got interest rates up to about 2.5%, but it didn't work out very well for them. And in 2019, they were lowering interest rates again, and they were going to go right back to the lower bound of zero if it wasn't for what? Boom, COVID. COVID steps in and saves the day. Like literally saves the Federal Reserve's monetary policy. All of a sudden, here it is that they got this massive stimulus packages that are just pouring out there into the system, and they got an inflationary scenario that is now just ripping through the economy, severing of the supply chain, and every single person out there is just screaming inflation. Inflation, inflation, inflation. Money printer go burr, prices go up, and the Federal Reserve is sitting back going, yeah, buddy. Man, it works so well. That makeup strategy we have, irrelevant, man. We don't even need to mess with that thing anymore. Look at it go. Look at the inflation. It's just ripping through the economy, and everybody thinks we screwed up. Perfect. Perfect. Now we can keep this persistently high inflation. And so as we start to roll into this and we have this persistently high inflation, people are very worried and concerned about what it is that they can expect from the future, considering what it is that they are facing today with war and tariffs and credible threats of Fed independence. And you have all these worries about a possible inflationary scenario. Well, this does what? It raises the inflation expectations. Now, something very interesting starts to take place here. Because, see, when the Federal Reserve was operating in a system in which that interest rate adjustments would then stimulate the economy, nobody ever really thought about it working any other way. They never thought about it working any other way. But yet it hit the lower bound of zero and it broke. And it didn't work anymore. And nobody really thought about it not working. Even the quantitative easing, all the money printing didn't work. It didn't create the inflationary scenario that they were looking for. They had entire strategies, makeup strategy, opportunistic reflation. They had a whole bunch of ideas on what it was that they were going to do to create an inflationary scenario, and then they launched those ideas. They had average inflation targeting, and more specifically, flexible average and asymmetric flexible average inflation targeting. Big, long, giant word. When you think about what it is that the Federal Reserve meant by that, is that they were going to let inflation run extra hot, extra long for an extended period of time, and nobody seemed to really hear it. The Fed said it, it's in their statements, it's in the consensus statement, it's all throughout their speeches, but yet every single mainstream media article would lead you to believe they were going for a 2% target. Why they did that is beyond me, outside of the credible threat theory, which is then saying that they are using the mainstream media to deliver the message of elevated inflation and inflation expectation. Why would they do that? To get off the lower bound of zero. Because operating at the lower bound of zero doesn't work. They can't adjust interest rates at the lower bound of zero. But if they had elevated inflation and inflation expectations, something very interesting starts to take place. And that is the neutral interest rate. That is the rate that is neither accommodating nor restricting the economy. It starts to elevate with the inflationary scenario. So now if you have enough inflation expectation that is persistently running through the economy, then you will have an elevated neutral interest rate. And if you have a Federal Reserve who is standing still and a neutral interest rate that is with the Federal Reserve, well, then you have an economy that is far less restricted. Push a little more inflation, and you might just actually be able to stimulate the economy. That's right. The Federal Reserve could actually stimulating the economy if you push the inflationary scenario enough. And now I know this concept, everything that I talked about inside of the 17 minutes inside of this video, is probably just so spinning to most people out there, like they cannot even grasp a handful of some of the things that I said. I have it all available for you inside of the credible threat theory. There's the school community, and I have an hour-long video series for you to go and review yourself, and you can get a much better understanding of these concepts. You don't have to believe me. I left all the speeches there. Just go read through all the 25 of them or whatever it is that I have there, or I'll just send them to you. Just ask me, right? It's all there. Everything is there for you. Now, nobody else is going to tell you. Literally nobody else is going to tell you that they had a plan to launch an inflation expectation that was elevated so that the neutral interest rate would move closer to the Fed funds rate, and that would be the stimulating effect to the economy. They don't move interest rates anymore. They move expectations. That's how they operate. No, I don't know why it is nobody else seems to want to talk about it. But I'm going to communicate it as much as I can until I finally break through, because I know people are picking it up one at a time. They're coming back to me. They're saying, dude, I've listened to you for like 2 years. It's finally starting to click. Like every video for 2 years, I've tried to say the same thing over and over again in different ways so that people can understand what it is that's taking place, because it's so complicated. And people have finally come to me and they're like, dude, it's taken a while, but thank you for staying so vigilant on this, because it's absolutely the most accurate way of looking at it. I mean, I've had too many people now come to me and say it. And it was just like, you've finally gotten through, and it's taken a while. And I get it, man, because it took me like 10 years of developing this whole theory anyway, going through hundreds of documents to finally come up with just a handful of them that I can share with you guys so that you can get a better understanding of this as well. It's good. Once you see it, it's so good too. Like you look at everybody's statement out there and you're like literally, it's so funny to think like every single time I see somebody pushing this inflation expectation through their posts or something, I'm thinking, yep, another central banker just got their wings. They totally want the people to feel it, think it, have it ingrained into them, elevate that expectation, and then make the economy far less restricted. It's a total benefit. I mean, here, if you can imagine, people ask, how is it a benefit? Here, I'm going to see if I can share this with you in the next 10 minutes here, and then we might cut this video a little short. I just wanted to get this out for you guys because I think it's so important, right? It is so important what is happening right now. And to get a better understanding of the situation we now face, by understanding it through the credible threat theory, you are going to look at your position and know exactly how to deal with it, right? Most people are like, what do I do? What's the trade? What do I? And I'm thinking, man, if you got this understanding, you wouldn't be asking the question. You'd just be running with it, right? You'd be running with your ideas. Think about it like this. If you are an investor who is anticipating getting a 2% return on your investment, okay, but you have an inflation expectation of 1%, what's the real interest rate? It's 1%, right? So now, if you're an investor who is anticipating this 2% return, but yet here you got an inflation expectation of 1%, which essentially erodes away your profit that you get off of your investment. If inflation continues to rise, what does it do? It continues to eat away at your profit, right? So now, if you have an investment that is 2% in an inflationary scenario that's 2%, what does that mean? It means you don't make any money, right? It's a neutral investment, right? But now, if you lower that inflation expectation, what does it do? Right? It raises that real interest rate, the rate in which that you were planning on getting from your investment. So now, if you continue to lower the inflation expectation, you will continue to raise the real interest rate, the rate that the investor plans on getting from their investment. So now, as the investor who is planning on getting a return from that investment, if you raise the inflation expectation, you will lower the real interest rate. If you are a debtor on the other side of that, and you have that same scenario, if the investor is getting punished, right? They're not getting as much money back because of the inflation, then you're the debtor who is a benefit. If it punishes the investor, it must benefit the debtor, right? Because now you're paying your debt back with deflated dollars or inflated dollars, however you want to look at it, lost purchasing power. And so as you think about it, if you raise this inflation expectation, lower the real interest rates, everybody out there who is in debt essentially is being stimulated, including the government and everybody else. It's a stimulating effect on the economy. All right. Okay, wing it. 2%, never mind. All right. Think the borders will be redefined in the next reset. Truth teller who never gives up. Thanks, Simon. Yes, you bet. Tabitha, I really appreciate you being here. Inflation is now priced in with expectations. Yeah, well, you gotta, I mean, here's the thing. All the documents that I ever put together and I shared on the credible threat theory, once you have gone through those things, you will not be able to see the economy any other way. You literally will not. Like you will just everything else will be so secondary, so superficial, so surface level, you will not be able to even communicate. Like you will be alone. So don't do it, right? You will be left alone as people will sit there and jibber jabber about economics in such a boring way, and you will see right through their misunderstanding of it, that you will literally not even be able to have a conversation with them anymore, because you will be on such a higher level, such a deeper understanding, such a profound like impact on what it is that you are now doing with your life, that you will literally be standing on your own. Yeah. Debt matters less when printer goes burr. Is inflation expectations enough? Are they starting to create real inflation with oil around the world? Is oil ultimate inflation? Well, it doesn't, I mean, one way or the other, it doesn't really matter if it's, inflation expectation that drives the inflation, or if it's actual inflation as a result of it. The inflation is what they were wanting. I mean, just again, how many times have I monetary policy strategies for a low neutral interest rate world? In 2018, John Williams, the New York Fed president, gave a speech talking about how it is that the problem that they needed to solve was an inflation expectation or an inflation scenario. How does he say it? Hold on, let me just say it for the accuracy of what it is. Hold on. Just so I don't mess it up. Monetary policy strategies, and what he says exactly in this speech, ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. Now, this is coming directly from the New York Fed president. This was delivered November 30th of 2018. I probably read this speech 5,000 times, right? And I'm surprised that I haven't actually memorized it in its entirety. There, this speech basically gave it away, right? This is what they planned on doing. What does the neutral rate mean for monetary policy and the anchoring of inflation expectations? Anchoring of inflation expectations. When a recession hits, central banks may not be able to reduce interest rates well below their neutral level to stimulate the economy as warranted because of the effective lower bound on nominal interest rates. What did I say earlier? When the Federal Reserve lowers interest rates, what do they hit? That zero lower bound. They cannot stimulate the economy. That's what he said. When a recession hits, central banks may not be able to reduce rates well below their neutral level to stimulate the economy as warranted because of the effective lower bound. They cannot get far enough below neutral. That's exactly what he is saying there. Because of the lower bound of zero, because of the low neutral interest rate environment, when the Federal Reserve hit the lower bound of zero, they were very close to neutral, and it was not stimulating the economy. And that is something that very few people know or talk about, right? It's called the low R star environment. This shortfall of monetary accommodation would result in less desirable economic outcomes during the recession and recovery. In particular, inflation would typically undershoot its desired target during these episodes. The persistence of below target inflation rates in many advanced economies over the past decade is a testament to this dynamic. Do you see the concern? I mean, do you see how scared they were? Here it is. They're like, man, we are at the lower bound of zero. We got a low neutral interest rate environment. We just printed up all this money and we have no inflation taking place. And I love when people push back against that. They're like, well, they're just lying. And I'm like, lying to who? Like, nobody else is reading this stuff. Nobody else is talking about it. Who are they lying to? Like the uneducated economists, like they put all this together so they can just trick me. It was just like, or they're lying about inflation. It was just like, of course they're lying about inflation. They've been lying about inflation since 1980 when they've been trying to manipulate it to meet their expectations or meet their hopes and dreams. They just been, I mean, whatever it is, it's fake anyway, but that's not the point behind it. The point behind it is that they have a monetary policy that they use these particular numbers, and with those particular numbers we have to understand what they are looking at and using for their monetary policy so that we can understand what they are doing with their monetary policy, so that we can understand what it is that we position ourselves with. Because if we think about it in any other way, we're just might as well just like not even pay attention to it at all. All right. And so when I think about what it is that people are screaming out there when they say, look at all the inflation, I'm like, what inflation? You don't know. I mean, what, like they're flying about the numbers anyway. So how do you know what inflation is? You can go out there and you can say, look at the prices that I'm paying on everything. But then that's the only thing that you would really have because all the rest of the data is fakery, right? See, this is why I lose it when people are like, dude, they're just lying. And I was just like, they're not just lying. This is what they are using. This is how they are conducting themselves. And this is the information that needs to be looked at. After that, if you don't, then you're going to miss it because then you're not having any clue about what it is that they are planning for the future. Like many people think it's very ironic that the Federal Reserve may be raising interest rates going into the future. How many people following the uneducated economist would think that that would be a surprise with the elevated inflation? None. Like I've said it too many times. If you push the inflation enough, you may actually raise the neutral interest rate above the Fed funds rate and make it stimulated, make the economy stimulated. And they would be forced to raise rates, which I think is very interesting since people are out there wondering what it is that the Federal Reserve needs to do to stimulate the economy. And I'm thinking, well, they just sit here and do nothing and just keep pushing an inflation expectation. It will raise the neutral interest rate and the economy will become stimulated. And then if they just say nothing for a while, most likely it'll just go away and it'll find a restrictiveness again. And they don't have to do nothing. They just sit there and just babble on about what it is they're going to have to do about interest rates that they don't actually move. And what else do you guys want to talk about? Are we done here? We're a half hour into this thing. We got 83 people watching right now with 42 likes. Thank you so much for hitting that like button. I was going to hold back from doing another video this weekend, but I just can't help myself. I just can't. I think this information is too important to like hold back on. And I really think that everybody needs to internalize this stuff or at least hear it so that if some point in the future something comes up that they look back on, they go like, damn, that dude who was sitting in that old Suburban was right. And now I'm giving it to you. Like I've given you all the information. Not everybody is going to be able to internalize it. The people who have stuck around long enough to actually get it, they're going to see it plain as day. They won't be able to see it any other way, right? What do you guys want to hear next? Are we done? All right. We live in a simulated dimension now. Yeah. Can't stimulate something that no longer exists. Do I follow Peter Schiff? Yeah, I used to follow Peter Schiff. I don't listen to really anybody anymore. Like, I'm not trying to diss on anybody out there, but really, I just went off on my own and started doing my own research, like everybody says that you're supposed to do. And when I started doing my own research, I started finding stuff that nobody else was talking about, and I couldn't understand why they weren't talking about it, except that when I would go back and I would listen to some of the things that they were talking about, they were essentially all regurgitating the same thing that they heard from everybody else out there, which was just basically blasting out news articles that they saw on Wall Street Journal or Bloomberg or something of that nature. I found it much different. Like I said, okay, well, I'm going to try and figure out this monetary policy thing. One of the very first videos that I had ever done breaking down the Fed's speech was monetary policy strategies for a low neutral interest rate world. There's a playlist on my channel for it. I find it very embarrassing when I go back and I look at that video and I think about some of the things that I was understanding of the Federal Reserve at the time. And I think, man, wow, that was a long time ago. I've learned so much since then, but it's a good teller of the times because it told me what it is that I was thinking and feeling at the time of reading that speech when it came out. Now, when I think about what it is that we now face within this economy, it's totally. I mean, this spans right through administrations. Like, I don't even think about like, who's the president? Oh, yeah, it's Trump right now. Yeah, right. Yeah, it's like literally the administration has very little like impact on what I think about monetary policy. What I think about when it comes from the administration is what does that do to the inflationary expectation? Both Biden and Trump. What does it do to the inflation expectation? Because massive inflation expectation came from both of these guys for different reasons. And all this political awareness that came to it and for it and from it and all this other stuff, I'm thinking all that attention you guys are giving to all that stuff going on out there. Hold on just one second. All this attention that you guys are giving to all this, do you know what it's done to monetary policy? Nobody wants to listen. Go ahead. I'll just watch. You know, I'll just watch it because what you guys are doing is actually delivering me what it is that the monetary policy is trying to deliver through the mainstream media to them. And so I couldn't watch them anymore because they were regurgitating all the same stuff, just different ways of it. They had their opinions, right? They have their opinions, but at the end of the day, it was all the same. Here's the problem that I face. I don't care if you're Ron Paul. I don't care if you were Bernie Sanders. I don't care if you were Peter Schiff. I don't care if you were any of them. It doesn't matter who you were. All of them were preaching inflation. Every last one of them were screaming it. Inflation, inflation, inflation. I was the one dude sitting back there going, do you know what this is doing for monetary policy? This is what they are begging and wishing and hoping for. They have a makeup strategy. They have opportunistic reflation. They're going into flexible average inflation targeting. People, do you not realize that everybody is screaming money printer go burr is giving the power to the Federal Reserve that they are looking for? Why are you doing this? Because they didn't know anything else. They literally did not know anything else. They didn't read these speeches. They didn't read the monetary policy. The central bankers were laughing at us. There was literally a press conference. I try to go back. I've done so many videos now I can't even find it in my content. There was a video that I had done talking about a press conference that Jerome Powell had given the press conference and then did a Q&A section at the end of it. In that Q&A, they asked him point blank about the makeup strategy, about letting inflation run extra hot, extra long for an extended period of time. And he said, well, because of COVID, the makeup strategy became irrelevant. And there was literally a chuckle in the audience. Like I played it back over and I'm like, you hear it, guys? He said that the makeup strategy became irrelevant. And they're all like, oh, yeah, it did. And I'm like, what's up with the chuckle, guys? Why would that be funny? Because you guys had planned to run inflation extra hot, extra long for an extended period of time. And then when you found that COVID totally did it for you, you got to blame COVID and you didn't even have to try and convince anybody that you were going to do it. And that's where most people get lost. They'd get lost at that point thinking, no way did they want that. And I'm like, there's a whole makeup strategy. You can go and research it for yourself. Like, I mean, it's like a 20-page document exactly on how it is that they were going to push an elevated inflation and inflation expectation. Here, let me bring it up. It's called, actually, there's a name for it. It's called, oops, hold on, that ain't it. God, bring it up. Come on. Open. Open says me. Don't close. All right, there we go. How robust are makeup strategies' key alternative assumptions? 2020. August of 2020. The analysis in this paper was presented to the Federal Open Market Committee discussion on the Federal Reserve's review of strategies, tools, and communication practices. When we analyze the robustness of the makeup strategies, policies that aim to offset, at least in part, past misses of inflation from its objective, to alternative modeling assumptions and the emphasis on the role of inflation expectations. Let me see here. Makeup strategies work best when the public understands, believes, and reacts to policymakers' commitment to offset misses in inflation from the 2% objective in the future. In particular, makeup strategies are most powerful when policymakers can influence the public's inflation expectations. In doing so, policymakers face a dynamic tension. They must maintain a long-run inflation expectation of 2% objective, while at the same time moving the short-run inflation expectations in response to the new strategy. So here it is. They're going to manipulate your short-term inflation expectations while anchoring it at a 2% long-run goal. It's so good. I mean, where else is it? Brainerd. Lael Brainerd, May 16th of 2019. She says, of course, it is not entirely clear how to move underlying trend inflation smoothly to our target on a sustained basis in the presence of a very flat Phillips curve. That was the unemployment falling really low, but it didn't create the inflation. One possibility we might refer to is opportunistic reflation would be to take advantage of a modest increase in actual inflation to demonstrate to the public our commitment to our inflation goal on a symmetric basis. So here it is. Like, I don't know how many people need to be told that they were pushing and wanting an elevated inflation expectations so that they could get off the lower bound of zero. The goal that they wanted to solve is the problem that they needed to solve was the risk of inflation that was persistently too low rather than too high. Here it is. Here's the environment. This is exactly what they were pushing, looking for, wanted, and got delivered. And so now when I think about it, how it is that they conduct monetary policy, it's not from the interest rate adjustment, it's from the inflation expectation adjustment. All right, Simon, you're misunderstanding what you just read. No, I am not. I assure you I'm not. All right. I assure you I am not. Simon showed me the monetary illusion being pushed out. His credible threat stuff has brought me closer to Christ. Thank you, UE. I know it's not everybody's cup of tea, but it's my truth. Well, thank you, man. I appreciate it. And I'm glad you are on your path. Would a recession hurt their high expectations of inflation? Well, of course it would. But there is like the recession comes from the lack of consumption, and the top 10, 20% are consuming like crazy. All right. He makes many great points. It's just he seems hyper focused on a solution he sells. That is my main issue. We should be flexible in our understanding. Well, I mean, you can go and take another view of monetary policy, like one from Peter Schiff. And I don't know how many times he's like presented you with speeches, let alone hundreds of speeches, and one that delivers a strategy that has literally been going on for decades that was established in a speech delivered by Ben Bernanke back in 2002. And by being relentless on this, you only tell one story. It's one story over and over again because it's the right story and it doesn't change. And so once you have internalized this and you have a better understanding of how it works, now you know what it is that you need to do with your life. Whether you're an investor, a business owner, a student, all right, figure out how you get started on a retirement, how it is you figure out, geez, Kitty scared the shit out of me. Thank you. Who's coming after me, man? I got Bigfoot or something. You want to say hi to the people? They say I'm hyper right now. Maybe. Is this just regular tea?
Jasmine, I think.
Jasmine, thank you very much, man. You're very cool. That's so funny. The kid is so good. Oh, that's nice. All right, we'll give it a few more minutes here and then we'll call it good. Agreed. Regarding Schiff Polygon, credible threat theory highlights that. All right. I was speaking about Schiff. I don't think I've ever heard him read a Fed speech. No, but here's what's crazy about it is I learned about the Federal Reserve listening to him than I did anybody else. And that's what's so crazy is just like most of my base of understanding economics came from Peter Schiff. Literally, like I mean, that's where it came from. That's what sparked everything that as far as like my inspiration and intrigue into everything. It literally came, I mean, there was other guys that I listened to a lot, but he was the man. He was the dude. And so that's what I find it kind of interesting is just like now from what I've gathered in my understanding of things, and even just especially over the last, say, 5 years of really diving deep into these Fed speeches so that I could even, talk about them, especially getting invited to go speak out on stage and stuff like that. I was like, man, I better really get this stuff down. I've like gotten to the point now where like I really honestly feel like I just moved beyond that. Like I just, all this rest of the stuff that the people talk about seems to be very superficial to me and very surface level and very regurgitated sounding from what other people have said. It's just spinning their own opinion upon it. Nobody's really given any kind of real deep research. Nobody I find out there does it. Like I try to constantly deliver, hey, look at these quotes from these people on these speeches here. It's all coming from the monetary policy makers, and like literally people, they're like, I don't know, maybe it's just too confusing. They're like, don't you just understand money printer go burr? And it's just like, I understand it. I understand exactly what it does. Whoa, whoa. And I guess we're gonna hang out here for a few more minutes while we drink the tea. All right. All right. I like Gammon's take. Yeah, George and I go way back. Like, I mean, since essentially when I started the channel. All right, over 20 years for me. He has taught me a lot, but nothing like I hear here. Yeah, thank you, Polygon. I agree. I like George Gammon's take on this too, what we are talking about. See, and I haven't listened to what George has to say in a while, but I can tell you that most of what I've learned about, like, I mean, being at the Rebel Capitalist events and meeting all those wonderful speakers there, when you hear presentations like Jeff Snyder's or Brent Johnson's, it all of a sudden gives you a whole different view of like what it is that's happening with the dollar, right? Like it gives you a different kind of view of it. And knowing that George has communicated with so many people in so many ways about so many different theories and ideas and policies, I would find it very difficult to think that he isn't really well tuned in on what it is that's happening. Excuse me. I couldn't tell you exactly the way he is seeing monetary policy, if he sees it in the same light that I do, if he sees it through the credible threat theory. I don't know if he sees it like that. I know that he sees things really well, and I also know that he sees them from a pretty elevated position. Like he's even admitted that to me. He says, "I like the way you take, like your take on things." When he had asked me about certain economics that were happening, he says, "I like your take because your boots on the ground. I like the way you view things." He says, "Most of us, we're at 30,000 feet looking down." He says, "You're on the ground looking up, and it's a whole different kind of view." And so this is really where I feel that I have a difference in opinion and view and understanding than most other economists out there, because most other economists are also like elevated in investments or position of politics or something of that nature. I'm one of the few people out there who's just doing it for the pure love of understanding what it is that's happening. And then sharing that understanding out here on YouTube just makes me just feel wonderful about the whole experience of it. It's just like I could sit there and just learn it all for myself, but then what would be the point? I don't get to share it with anybody. There's no fun in that. Oh man, that's good. Where's my glasses? All right. Does King Dollar Destroyer likes high asset prices? I don't know if it's necessarily likes high asset prices. When I think of King Dollar the Destroyer, I think about how much debt issuance is done in dollars. Like, my house, I don't have anything really else. It's just a house. So, I think about the debt that is issued in dollars. And so when you have this much debt that is issued in dollars and you have a demand for dollars that really starts to increase, and those dollars are hard to come by in order to pay those debts, what happens to the debts? They start to default. And now this is King Dollar the Destroyer. Most people aren't going to see it like this. They're going to think that, nobody wants the dollar. Dollars are weak. Dollars are fake. Dollars are worthless. Dollars are going to come home to roost in a massive way. You got hyperinflation around the corner and nobody sees it. Nobody sees it that way, that there is all this demand for dollars outside of the United States. Now, I can go and find other people who are talking about it, but I really like to see it from the monetary policy. And now monetary policy actually has a great document on that one too, and it's called Dollar Funding Stresses in China. And Dollar Funding Stresses in China is excellent. It's an excellent piece. Let me see if I can bring it up here. um, that talks about what ends up happening when there's a dollar shortage taking place. And that is like scary to think, like what it means. Here it is, dollar funding stresses. November 1st, 2022. So this isn't even really that old. Dollar funding stresses in China, and it talks, let me see if I can just kind of bring it up here. The need for U.S. dollar funding during financial crisis in mid-March of 2020 as the COVID pandemic news shocked markets was evident in a number of countries. Notably, however, China's dollar liquidity needs received little attention, right? So nobody heard about it, but it was a huge deal. In fact, do you remember Evergrande going like the biggest property developer? When it started to go bust, it wasn't because of necessarily them not being able to pay their Chinese dollar or Chinese denominated debt. It was the dollar denominated debt portion of it that they had a hard time acquiring the dollars, and it started sending the whole thing into chaos. There was contagion effect. There was a horribleness that was happening from it, and it was all because of the dollar portion of it. They couldn't come up with the dollars they needed. Dollar funding stresses in China. Another credible threat theory document for you. Right? See, I just drop all these documents for you to go check out. You don't have to listen and pay attention to those guys who are regurgitating the same old information about how the BRICS nations are going to take over. You can go and read about how this one of those nations are suffering the consequence of a strong dollar, trying to figure out how it is that they're going to fund their debt. Right? And that's coming from the Federal Reserve. They're like, man, what are we going to do when China needs all these dollars? Right? I mean, it's not their problem that China needs it. Their problem is China needs it, and it's going to strengthen the dollar, right? They don't care if China, like, let China fail. Who cares, right? But that's not the problem they face. The problem that they face is that it's going to cause the strengthening of the dollar. And that's going to be a major problem. They don't want that. They don't want the dollar to strengthen, right? All right. What we got here? Polygon. Anyone with a cell phone will be able to take dollars in exchange for their weaker currencies. These stablecoin companies will buy more and more treasuries. For the people who can say they can't see how things are for the lower half because they are 30K feet, it's really simple math and they are being ignorant, and it is because the numbers are small. No, Brandon, no, it's not. It's not that way at all. You got to understand, when you are looking at data sheets to do an investment, as opposed to how many phone calls am I getting because I do in sales. See, they're looking at data to say, hey, man, is consuming picking up? And I'm listening to the sales and thinking about the sales that I'm doing, right? So I'm looking at it in a different fashion than they are. They're looking at data. I'm looking at my real life. I'm looking at all my buddies around who are living their real life. And I think to myself, I have a macro understanding, a macroeconomics understanding that is at such a level that I use everything that I see and hear as input, as my data. I don't read data sheets. I don't look at data sheets. I study economic forces. I look out there and I see what it is that's happening with the price movements, right? Like, I think about it, it was just like, how far did it move and by how much? That's my interest. So when I think about what it is that other people are doing, they're reading these data sheets. They're actually reading what I have already lived. Like, I have to live my life, do my thing, and then they have to read about it. So who is it that's first? Who is it that, like, what is it that I'm seeing and what is it that they're seeing? We're not looking at the same thing. Uh-huh. It's not like they don't get it. It's not like they don't relate. It's not that they're playing a whole different way. Like, they're playing the game in a whole different way. All right. Good evening, y'all, and all-nighter hider. Right on, Pete. It's great to see you in here. Foreign money exchanges was a thing. Now, not so much. I don't want documents. I want video, Simon. Yeah, well, that's what I give you, boots on the ground versus old data. And that's what it is. It really is. I mean, that's really one of the reasons why the channel did so well is because I was talking about lumber in like real time as it was taking place. I'm like calling out the things that I was seeing happening within the lumber industry. And so the traders were getting like that news and being able to use it before like anybody else was able to get the data. So they were like watching my channel and getting like this firsthand knowledge of what it was that was happening within the lumber industry. Now people say do the same thing now, and I'm like, lumber doesn't do anything. Like it just sits there, you know. It's like, okay, well, lumber's at 550 per thousand. Oh, I'm sorry, it's at 600 per thousand. No, no big deal. Now, what is it that I'm supposed to do? Like I can't make lumber be popular, right? And so I think about what it is that's happening within the lumber industry, and I think it's incredibly telling, but it's really boring. The reason why it's incredibly telling is because it's boring. Nothing's happening within this industry. It's dying. That's very telling of an economy. Like, I don't know how many people realize how exciting of a news that is, but most people are like, well, just let me know when it kicks off to 1700 per thousand again, okay, bro? Whatever, All right, when you incorporate data with IRL and your info, that's 100. Do you think yuan will continue to get oil through Hormuz sustainably? Man, that's a tough one, all nighter. I don't know. Like, I try not to predict what it is that's going to be happening through all that, and I, I really don't know. But I'm not like to, to to be perfectly honest with you. I'm not that surprised to see some of the BRICS nations actually taking over some of these trades. Like, I, I know I said it's like in favor of the Fed. What I don't think I really include is how ugly that's going to look along the way. Talk about war and death and destruction and all that other stuff. You guys know me. I'm just not into it. Like I talk about a lot of stuff, but I don't go into the painful experiences that people are going to get from it. So when I see like the wars breaking out and stuff, and it was just like, yeah, that's part of this. This is how it works. It's not friendly. I mean, I don't know where people might get the idea that's friendly. It's not fair, right? There's no fair. It's not friendly. Um, yeah, I don't know any of that stuff, but I'm not going to sit here and cry about that either. So I'm just going to figure out what it is that I need to do about that. So, like, when it comes to like BRICS nations, I have a feeling going into the future that you're going to start seeing them doing a lot more. And it's probably going to be taken in such a way that is like, look at them take over. They're, doing, they're screwing the dollar over or whatever. And I can imagine that being the story. But ultimately, when I think about what it is that the Federal Reserve is facing as far as the dollar liquidity issue and the demand for dollars outside of the nation, I can really see where that would be a benefit to the dollar. Like, hey, we don't have to come up with the dollars to perform all those transactions. And so, if you can get oil and other trades to be done in other currencies, then that's actually a bit of a relief to the Fed, right? Like, and especially to the government itself, to the United States Treasury Department or the government having to come up with, or at least the Fed trying to buy that debt, sending the government on an unsustainable debt path. Like, this is not something that can continue on forever. So, trying to figure out other ways of working around it, this is kind of one of the solutions. And now it's not a good idea for like those who are in the effort of trying to get there, and it ends up being in battle and war and explosions and takeover and stuff like that. And people are like, they look back and it was just like, well, you said it so calmly though. And it was just like, well, yeah, I kind of did, but yeah, people are gonna die, I guess. It's not gonna be fair, it won't be fun. But, what are you going to do? Are you going to cry about it, or are you going to try and position yourself? People were like, well, we should try and prevent the war. And it was just like, well, something else will happen. It's still going to be war. It's still going to be death. It's all part of this game. It's not even a game. It's just the reality of it. It's just the way it is. No, Simon, that's not hyperinflation. I don't know what hyperinflation is. That's now hyperinflation? Not even close. Not even close. All right. Do you think there will be a civil war? I don't know about that. I mean, how do you have civil wars? Like, before you'd have like, people who would run around and attack each other. Now you got drones that'll just come into your house and just blow you up inside of it. So it's just like you can't really fight like that. You can push back against the levers by not moving into luxurious experiences. Taking your extra money and moving it into a decent rate of return production, something that is going to be useful into the future here in the United States. The moment that foreign production comes in, domestic manufacturing leaves, and the problem is going to get any worse. The only way to push back against the levers is to literally not move into luxurious experiences. It's the only thing. Anything else, it don't matter. So considering that people want to work hard and enjoy their hard work and then like live a decent life is most likely going to continue going into the future. And with that, there will be inequality. Guaranteed. Every time. Zeroed out. Right? Until the new money turns off. All right. Hyperinflation is 50% increase month over month. We don't have that, for God's sake. That's really being sensational. It really is, And I mean, actually, what it is it's giving the power to the Federal Reserve that they really need to elevate the inflation expectation, to raise that neutral interest rate, and move it ever closer to the Fed funds rate. Just do yourself a favor. Go and just type it into a chat bot or something so that you can see it. All right? Does raising the inflation expectation, raise the neutral interest rate, moving it ever closer to the Fed funds rate, making the economy less restricted. Right? And just go and see for yourself your own inflation expectation, your hyperinflation expectation, your end the Fed expectation, your dollar failure expectation is literally the power the Federal Reserve is looking for. So congratulations, you're delivering it. Right? Every time you think it, feel it, and believe in it, then you are going to behave in such a fashion that creates that outcome. Now, I'm not trying to say it's not going to be a real outcome. It is. Guaranteed. Just look around, man. Everybody believes it. Everybody sees it. Everybody thinks it. And there's very little doubt that it's going to take place. Now, how is it that you are going to look at this and think about it and feel about it is going to have a profound impact on your future, on what it is that you are going to do to position yourself? Because when I think about it, I'm like, this is going to make the economy less restricted. What does that really mean? People who have debt is going to find that their debt is going to be less of a burden with this elevated inflation and inflation expectation moving that neutral interest rate higher. All the people are going to find it very easy to operate within the economy. And that's scary to think about, considering most people have a very opposite view of it. And that's really built off of how it is that the monetary policy and the powers that be have really communicated the idea out there to the people. I mean, how many people think that the Federal Reserve is going for a 2% target? They're not. They want to be persistently high so that they can communicate about interest rate adjustments. They want to be in the idea, they want to be in the energy, in the expectation of trying to get to a 2% target, but they want to stay persistently high so that they can communicate about the interest rate adjustment. If they get to 2%, if they get a low inflation environment, they lose their monetary policy, which is a communication. Right? Once you get to the lower bound, you can't communicate about interest rate adjustments if there's no ability to adjust interest rates. Right? Believe me, inflation and inflation expectation is a total benefit to the Fed. I mean, I got 50 documents to talk about it. You can have all the debt access, but you can buy supply chains. Nothing moves for you. Inflation will only go higher. Fed will raise rates. The gap between the rich and the poor will grow wider. People will turn to the government for help and politics for opinions. Okay. This is why you lose. 91 watching and only 69 likes. No wonder you get wiped out by inflation and drive and dive into luxuries. Anyone watch it? Only 69 likes. Okay, so the gap between the rich and the poor will collapse. I doubt that. No, as long as the new money continues to pour in, you're going to find the wedge of inequality getting worse. There's no collapse between the rich and the poor. Not until all the money turns, not until the new money turns off, which is the debt issuance coming out of the United States government. Considering the idea of stable coins and negative interest rates going into the future, I really seriously doubt that they're going to collapse. Uh, the rich can't buy anything. The rich buy everything. Okay, moving on. When I was a kid, we used to scrape bugs off the windshield of my parents' vehicle. Where are the bugs? Yeah, well, I live in Oregon. I think it's just because the windshield constantly wipes them off, the windshield wiper. Yeah, there's no bugs. Oh, Deja, take on debt and make it work. It is possible. It's what everybody's going to end up doing, and if they're going to be on the other side of the wedge, All right. Are we good, guys? Did you have fun? 73 thumbs up. I really appreciate everybody joining in on today's live stream. Want everybody to make sure that they have access to the credible threat theory. There is a community entirely built around it for you to have a better understanding of the situation that we are faced with. There's a link down in the description. It is probably one of the greatest things that you're ever going to understand when it comes to this monetary policy. Nobody else is delivering it. You can go through all the speeches, right? You can go through all these Fed speeches, the massive amounts of documents that I have collected over the last 20 years, so that you can see these dollar funding stresses in China, see the truth behind what it is that China really wants for dollars. You can see the truth behind average inflation targeting, where the Federal Reserve was actually pushing inflation expectations to be elevated for a significant amount of time through the makeup strategy, opportunistic reflation. There's all kinds of information that is buried deep within these speeches that is literally not delivered anywhere else. I am the only one who has put it together, and you can see it within the comments. How many people are out there saying, you're right, dude, you're the only one who is delivering this stuff? Right? These people, they go and watch all the rest of the YouTubers, right? They're watching all the rest of them. Those guys, all the rest of the YouTubers, they're covering all kinds of stuff that I don't cover. But they ain't covering what I'm covering, right? And what I feel I'm covering is by far the most important part, because nobody understands the monetary policy like the credible threat theory does. Oh, deja vu, you let me know. All right. You guys are awesome. I really appreciate you all being here. We're an hour and 7 minutes into it. 91 people watching, 75 likes. Thank you so much for hitting that like button. Be sure and share the video. Sharing the videos, or at least the first, half hour of this video, I think was pretty good. The first 20 minutes. This is really where the information is. And so as you're telling people about it, and it's like, dude, I ain't got time to listen to an hour-long video, just tell them, no, it's the first 10, 20 minutes. The rest of it is just them chatting with the comment section, right? Even though there's bits of gold inside of there, right? We talk about some really good stuff. Generally, the information's in the first 10, 20 minutes anyway. Alaska Zag, deja vu, you let me know. Oh, and that's another thing. Starting next week, we are going to be doing a live stream in the school community. So that's another thing. We're going to start breaking this stuff down, like probably one speech at a time, or, one concept at a time. And we're going to start doing that in that community. So if you want to actually interact with the uneducated economists, start asking closer questions and start actually having the conversation, that's going to be a good spot to go to. You can line up the questions ahead of time so that we can get in there and really keep that thing organized and addressed. I'm really trying to push it. There's really nowhere else that you're going to go to in order to get this information. And like I said, people have told me they've watched it for years before they were finally like it clicked for them on what it is that's happening here. Once it does, you will not be able to see it any other way. You'll look at all the rest of the people out there telling their inflationary story, and you're going to be like laughing, going like, well, there it is. There's the monetary policy being delivered, with a nice little bow and a package and all that. So, all right. Everybody is awesome. I said it too many times. Uneducated economist, you let me know.